Hey guys, how you doing? It's Coach K here with another episode of Cryptocurrency Education. Today we're going to talk about what is an ETF and what is a Bitcoin ETF and how is that going to affect the marketplace and potentially bring in very large amounts of new investors, people that like your grandma or your dad who didn't figure out how to get involved with the wallets and all the difficulties of learning how to get on exchange and KYC. They won't have to worry about that anymore with an ETF. So this is what's about to come out. Guys, stay tuned. All right, guys, so we're going to talk about exchange traded funds. Right above my head, you can see what it is. It's an exchange traded fund or an ETF. It's actually a fund of that owns a certain amount of underlying assets, something like stocks, oil, Bitcoin, foreign currencies, etc. And then you buy into those very easily, and you get stakes or you get divided into shares, and then you will get interest, obviously, as the fund goes up, and you will get dividends paid out every year. So very good stuff. And the thing is, it's designed for individual investors to come in and easily invest in something. So as we know, Bitcoin can be far daunting to get involved in, learning about Coinbase or learning about an exchange and how to get a wallet set up and how not to lose your crypto and get hacked, etc. So a lot of people would rather do this, and it makes it very easy for you to buy Bitcoin. And this is why everyone's so excited about ETFs. So moving on, they're very similar to mutual funds, but they're unlike a mutual fund because you can actually buy and sell them like a stock during the day. And it opens, you can buy when the market opens like a stock, an ETF. And as it goes up, if Bitcoin is going up that day, you can sell it on the way up and make a profit. So that's how an ETF is a little bit different than a mutual fund because you're kind of locking yourself into a mutual fund most of the time. And someone else is trading for you, whereas this is kind of trading during the day. And actually can potentially have more profit. So, history of ETF, they started in Canada, go Canada. I'm from Canada, if you didn't know that. It was from Toronto Participation Fund to track the larger stocks, and then eventually the ETF industry starts in 1995. Asia starts a few years later, gets over to Europe. 1,500 ETFs by 2014 traded in the U.S. with over $2 trillion in assets, and now at this point we're at $3 trillion and potentially a little bit more than that. Now we're at 2018, and we're getting closer to 2019 already. It seems like far away, but it's not that far away. All right, so why do people invest in ETFs? Well, there's a lot more pros and cons. You can buy them any time of the day. There's not a huge load on sales. It's easier in terms of not having to pay as many fees. Less taxes. You can buy, you can sell, you can short, which is another huge thing, which is nice. And so basically, this can help the market grow in terms of Bitcoin. If you just think about lots of new investors coming in, it being easy, not actually having to actually tangibly hold the assets. So you're buying into that asset, which is different. And so now you can also buy into not just your stocks and like you just add on another asset, which is Bitcoin, which is what's going to happen, except Bitcoin will determine whether it goes up or it goes down. It's pretty straightforward. So the bad things are they're thinly traded. ETFs have wide bid spreads. But of course, we're probably going to expect Bitcoin not to have this issue. If it does, it would only be at the start. ETFs track their underlying index fairly well, but there can be technical issues. This happens in crypto all the time, so we're kind of probably already used to that type of volatility stuff happening. And they're not settled for 2 days, so it takes a little bit of time to settle transactions. As we know, Bitcoin and crypto is quite fast compared. An ETF just basically means an exchange traded fund, which means that they're bought on an exchange, they're traded like a stock, and they're just like a mutual fund because they also track the whole entire index of the market. So how are they bought and sold? Well, Sally or Jane, let's say, wants to go, likes to trade stocks on her own. She goes to a broker, has 5K. Jane then has been hearing about these ETFs and starts doing a little bit of research into ETFs, learns about how well gold is doing, looks up some of the popular ETFs associated with gold. Now just assume if this is not gold, it's Bitcoin, for example. And then Jane decides it's good to have exposure to two different sides, the bullion and the miners, so you could think about this as well. Maybe you can buy into eventually an ETF that would be a Bitcoin ETF and a Bitcoin mining ETF, kind of hedging your bet there. and then you could have own it. So then you don't have to actually buy gold and hold it. You're buying into gold. Okay, so that's a little bit different. And then you purchase the shares on you purchase those shares through the ETF on your online broker, and now she can monitor them closely, just like if she was buying a stock. So the ETF explosion. This is only from 1993 to 2011, but it gives you a good exposure of how much it actually grew in such a short time. It went to 1 trillion by 2011, and now we're in over 3 trillion, probably closer to 3.5 to 3.25 to 3.5 trillion in this marketplace, and it's going to grow with Bitcoin. Absolutely, I believe that. Why are ETFs popular? Easy to diversify your portfolio just by buying in one thing, and so that's great. You don't have to pick out funds. You just have to pick out one group of assets, and then you invest into that. They can be bought on margin, so you can actually borrow money and buy extra. So let's say you want to buy ×3 margin, you'd put 1,000, you'd get $3,000 worth on margin, and then basically as you go up, you get 3 times the amount, but as you go down, you lose 3 times the amount. So higher risk, but you can still do this. And then you can also short. So like I said before, you can buy on the way up long, and you can short on the way down as you think it's going to go down. So you can own commodities, and like I said, you don't have to actually have them with you. You don't have to have a barrel of oil with you, for example, which is nice. They have tax advantages because you only get taxed on ETFs when you pull your money out, unlike mutual funds, as every single year they count as capital gains. And there is an ETF for every investor, so no matter what you want to invest in, high risk, low risk, very, very low risk, etc., there is an ETF for you. So that's really good to know that as well. And that is what an ETF is. So if you have any questions about what is an ETF or how is it going to work, that's where we're at. Now, to talk about how is this going to affect Bitcoin? Well, think about it just really simply. Bitcoin is an asset that many people know about now. There's more exposure. People understand it. They may understand it in many different ways, from good to bad. But the people that have started doing research into it probably are thinking maybe this Bitcoin thing is a really good idea to get into. But then they're like, holy crap, I don't understand this Coinbase exchange, this KYC, all this difficulty. But I understand how to use my application on my phone that I use to buy and sell stocks all the time. What do you think is going to happen? Well, this is exactly what going to happen. I'm going to call it right now. You are going to see a lot of growth in the market on August 10th, if that ETF is approved and they approve a way by 2019 Q1 for them to buy Bitcoin easily, Bitcoin's price is going to skyrocket because people are that know how to buy Bitcoin, that understand wallets and stuff like that, are going to start to buy a lot of Bitcoin, which should create a bull run, and that is what we're likely going to see. So that's pretty much it for today. I will see you guys later. Coach K signing off.